Silver at $100. Overnight, it sounds impossible, extreme, even irresponsible to say out loud. But markets don't move based on comfort, they move based on pressure. And right now, pressure in the silver market is building faster than most people realize. Supply is thin, physical metal is vanishing, institutions are repositioning, and a single catalyst, one announcement, one failure, one policy shift could force silver into a violent repricing. This is not about long-term optimism. This is about timing. Today, we're breaking down why a $100 silver shock move is possible, what Tuesday represents, and what the smart money is preparing for before the rest of the market wakes up. Welcome to Boring Silver Mysteryware. Boring charts hide explosive realities. Today's video is urgent by design. Not because of hype, but because of structure. We're analyzing why silver is approaching a critical breaking point, how overnight repricing events actually happen, and what a Tuesday plan really means in market mechanics. This video is divided into 10 chapters. Each one uncovers a layer of the silver market. Most people ignore it. It's too late. Stay focused, because when silver moves like this, it doesn't give second chances. The idea of $100 silver sounds extreme only if you assume markets move slowly. They don't. Markets stay calm for long periods, then reprice violently when pressure exceeds tolerance. Silver has a long history of compressed pricing, followed by explosive moves. Adjust silver for inflation. Compare it to gold ratios. Factor in industrial demand. Suddenly, $100 is not aggressive, it's mathematically defensible. What makes this moment dangerous is not optimism, it's imbalance. Supply has failed to grow. Demand has accelerated. Paper leverage has expanded. When price no longer reflects reality, the correction is not gradual, it's sudden. Markets don't need weeks to reprice, they need liquidity failure. An overnight move doesn't mean magic, it means thin order books, panic buying, forced covering, no sellers. This often happens after hours, during Asia or early Europe sessions, when liquidity is weakest. If a major event hits policy news, delivery failure, vault report, the price doesn't climb. It jumps. Silver has all the ingredients for this kind of move right now. Paper silver sets the illusion of price. Physical silver sets the limit. Right now, physical inventories are under stress. Vaults are draining. Delivery times are extending. Premiums are rising. When physical silver disappears, paper prices lose authority. If a large buyer demands delivery and supply isn't there, the market has only one tool left: price escalation. That's how overnight repricing begins. Markets reset expectations at the start of the week. Tuesday is often when new data is absorbed, institutional positioning becomes visible. Margin calls or processed liquidity shifts. If pressure builds over the weekend, Tuesday becomes the release valve. That's why many historic market shocks didn't happen randomly, they happened early in the week, when positioning was forced to adjust. Tuesday isn't magical, it's mechanical. Silver is one of the most heavily shorted commodities in history. Short positions work only when supply is abundant and confidence holds. When supply tightens, shorts become fuel. If prices rise quickly, shorts must cover. Covering creates buying. Buying pushes price higher. Higher prices force more covering. That's how vertical moves happen. $100 silver doesn't require new buyers. It requires trapped sellers. Silver doesn't exist in isolation. Currency, weakness, debt expansion, and policy exhaustion all funnel pressure into hard assets. Central banks don't need to announce anything dramatic, markets front-run reality. If confidence in currency weakens even slightly, silver reacts immediately because it's small, tight, and liquid. Silver moves first. Gold confirms later. Unlike financial demand, industrial demand is non-negotiable. Solar panels, EVs, electronics, medical devices all require silver. Production doesn't stop because price rises. When industrial demand collides with investment demand during a supply squeeze, price must ration usage. That rationing happens through price shock. Media reacts after confirmation. Markets move before. By the time headlines say silver surges, the real move is already over. The most violent repricing happens in silence. Right now, silver is still considered boring. That's when it's most dangerous. A $100 silver print wouldn't be symbolic. It would signal paper market failure, supply breakdown, loss of pricing control, structural repricing. even if temporary. It would reset psychology forever. Once the market sees it's possible, silver is never viewed the same again. Watch these signals closely. Physical premiums, overnight futures, gaps, volume spikes, delivery news, silence from institutions. If multiple signals align, the move won't ask permission. It will just happen. Silver doesn't warn loudly. It warns quietly, then moves violently. $100 silver overnight isn't a prediction. It's a risk scenario the market is now capable of, and capability is all markets need. If you want clarity before chaos, subscribe to Boring Silver Mystery. Like the video, share your thoughts, and stay alert because the biggest market moves don't come with countdowns. This is Boring Silver Mystery, where boring markets reveal explosive truths